This stock just reported earnings and absolutely cratered. It made new all-time lows to end the week and is now down over 60% off of its highs from a few months ago. This company is expecting to see growth decelerate sharply in 2022, dropping to around 15% year over year. And this is one of the big reasons Wall Street is spooked. It isn't the only reason that Wall Street is spooked. We're going to talk about the other reason in this video. So stick around, we have a lot to discuss in this video. As always, we'll talk about whether this is an opportunity, whether this looks like a good investment. Does this company actually have something unique here that warrants a possible investment? We'll talk about all that and more, guys. And if you enjoy the content, hit the like button, subscribe. If you want to discuss stocks like this with me and others in the community as well, consider joining our VIP group where you will get access to a Discord as well. Link description down below. So the stock in question here is Roblox. Ticker symbol is RBLX. They're a popular online gaming / metaverse play. They just released their earnings, and looking into this deeper, we can see that they had very impressive growth year over year for both Q4 2021 and for the full year of 2021. Revenue increased, positive free cash flow is strong, increase in daily active users, and more people than ever are engaging with the platform. For 2021, they pulled in almost $2 billion in revenue, of which over $500 million was free cash flow. So this is a very strong free cash flow business, which I love to see. Free cash flow is a great metric to look at to see how well the company is operating and how much money they have at the end of the day to spend on things like reinvestments, on share buybacks, on dividends, whatever they want to do really. And of course, the higher the free cash flow, the stronger the financial position of the company is. Bottom line, guys, free cash flow is king, and it's a metric I look at for every single investment that I make. Anyways, jumping back to Roblox earnings here, we can see that they actually provided us with some January 2022 metrics, and we can see revenue is still growing fast, 64 to 66% year over year, daily active users is up, hours engaged is up, but the red flag pops up right here. The concern pops up right here. The second concern that Wall Street is paying attention to, and that is that bookings was only up 2 to 3% year over year, which is essentially flat. So let's pause for a second, okay? If you have a high growth company, you want to see their metrics grow highly across the board. And when you see any metric of theirs grow essentially flat 2 to 3% year over year, there's definitely reason to pause and reevaluate. Not reevaluate in the sense that you want to sell out of the stock. I know some people did because the stock is down big, but reevaluate in the sense that is your future projections and your future outlook for this business still as strong considering these new numbers? I know on YouTube it's like if you change your mind on anything, you're hated on, but when you have facts and numbers in front of you and you can actually see deceleration in parts of business, you have to be able to adjust and think, okay, does this company still make sense long term? Is the projection that I have for this business long term still valid? Clearly, a lot of people felt it wasn't, which is why it sold off. Now, bookings, if you're not familiar, it refers to Roblox's virtual currency Robux, which the customers can buy to then spend in-game on random things. So to see this metric barely grow year over year does raise concern as to how much spending is going on in the platform, which means eventually this will affect other metrics of the business, including their free cash flow. The million-dollar question is this slowdown in spending temporary? Is it just a short blip here? Or is this the beginning of kind of a cycle change and things slowing down for the rest of the year, maybe into next year as well? If it's the former, then I don't think you have anything to worry about. The stock should bounce back and recover quite nicely. But if it's the latter, this could be kind of a stock that downtrends for a little while here. From the way I see it, looking at the stock price movement, it seems like the market has kind of accounted for worst case scenario, meaning that things are slowing down going forward. So you really have to be a strong bull on this company to go against the grain here at this time, because from the metrics that the company has provided us directly, things are slowing down. Now, the enterprise value to sales multiple has contracted from over a 20x now a 9x for this business. And this is a drastic drop, but if growth is really going to slow down here in the next year and metrics like bookings come to a crawl or possibly decline, In my opinion, even a 9x is too high of a multiple for this business. This is a perfect example of a company that's benefited massive from the COVID boom, but is now seeing kind of the hangover effect and things coming back to reality. And again, I'll go back to the question you gotta ask yourself, is this something that you believe is just short term? Or is this kind of a longer, couple of years trend, maybe longer, where the business actually declines now because there isn't as much spending, excitement, engagement on the platform going forward. Now, historically, for a business like this that's going to see their growth decelerate massively, you typically will give it a multiple, from my experience, around like a 5x, 5 to 10x or so, probably closer to 5x or so on the EV to sales metric. And since we're around a 9x now, closer to the high end of that range, there is a good chance that this actually contracts even more and we see much, much lower prices. Will we get there? I don't know. I think there's a possibility that this kind of sells off for a little while, but if the market recovers, this also bounces back with the market. But next earnings will really be telling, because if January was weak, February continues to be weaker, March is even weaker, then we can kind of see that, okay, this is actually a trend that's starting to form, things are slowing down for this business, and there could actually be lower prices ahead of us here. If, on the other hand, things pick up, there was just a short-term blip, then this could jump to like, a 10 to 15x multiple again, and you can see some good upside in a fairly short period of time. But again, that is all dependent on how their next earnings goes. Now, to me, I'm not quite convinced and not quite sure of the future of Roblox in general. I know there's a lot of bulls on this company, especially when it comes to like, engagement, and it comes to like the metaverse and all that stuff. Personally, I'm not really buying that story right now. Maybe I missed out on some opportunities, some gains, but I think there's better place to put my money for metaverse type opportunity. But that being said, they have a strong user base, over 50 million users. They are still growing technically year over year, and they do have something clearly special that people want to keep coming back to and keep engaging with. So long term, we'll see how the story plays out. Short term, there are some questions here that need to be answered. Regardless though, this is a stock that's a pass for me right now. I'll give it some time to kind of play out, digest, and I'm in no rush to really open a position in this company. It doesn't really interest me that much, but I'd love to hear from you. If this is a business that you own, what did you do after this recent drop? Did you add? Did you sell? Did you reevaluate and figure, hey, this is not really as optimistic as I thought it would be, so you kind of trimmed your position? Love to hear your thoughts in the comments down below, guys. But anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.